0.2, missing expectations. Industrial production beat expectations at 0.7%. We're starting off here inside of the dollar, and DXY is strengthening here inside of this pullback from last week Wednesday's lows to highs. The reason that that is important is because currently there is a negative correlation on the currencies and the commodities. Now it's neutral on the indices. We are in a neutral environment right now on the indices, so no effect. But we can see in the 15-day period that it is losing, and actually is very close to turning, flipping negative 0.5s on the S&P, and the Russell is already negative 0.5 on the NASDAQ. What does that mean? It means that over the smaller time frames, that the dollar strengthening can have a downward effect or a headwind against the indices. And you can see here that the dollar is screaming higher, so much so that it has broken out of its opposing measured move short. What that presents here is a little bit different look than what we had in the pre-market time frame, was that we had our resistance levels and VIX support levels leading us into gap fills below, and that there were pullbacks below us. Now we're leading into a gap fill below us, but those pullbacks are in question because the dollar strength trade is confirmed. It is confirmed. We're going to get a little bit more information here when we open right at 9:30, where bank opens up inside of these two opposing setups. There's still a bank downtrend. So if we break this long from lows, and that also is a leading indicator that would suggest that those support levels below us should not be trusted. And then there's the VIX. Now, the VIX is in its very first day of the March contract being the front month. And as you can see, it defended its old support level from last week, Friday. Now, we are squeezing into resistance. This little dotted line that you see here is the 2075. And what that level is I'm looking at it from the perspective of, what's the 2075, what's yesterday's highs to lows on the VIX. So there's the individual contracts, 50% retracement short. There's the individual contracts, 50% short. And then there's the continuous contracts, 50% short. And what we're watching there on the continuous contract was the continuous contracts short setup. But the March is drawn from the 2165 to our low of the 1989. So those are the two variations. What I'm doing here is I'm simulating the March contract on the continuous contract price now. So these are the two variations of resistance levels that we have above us. And those are the variations, the inverse of the variations of longs that we have below us on the indices. Now, yesterday we were front run at 38.2% lines, or I should say during the overnight time frame. And where is the long from lows? It's down here at the 47.50. So we're going to find out as we move forward into the morning if the VIX in its March contracts defends its new resistance level and ends up breaking through these long setups to confirm the continuation of the indices rally into those upside targets below. If the VIX were to break out of the 2133, round up to 35, add a tick, the 2140, and we'll just mark that with a dotted line here as our line in the sand. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.